Hello, everyone, and welcome to this TradeStation webinar. This is the art of TradeStation, specifically, test your trading ideas before risking your capital. So we're going to talk about strategy trading today, from idea to implementation to refinement. And you're going to see how easy it is to take just a simple trading idea, test it against historical data to make sure you have something sound, something you want to trade going forward. And we're going to take a look at all the tools that are available in TradeStation to make that job as easy as possible. All right. Before we jump over here to our content, let's go through some of the disclosures. Keep in mind that every symbol and idea that I talk about is for educational purposes only. It is not a recommendation of TradeStation. Also, active trading is not suitable for everyone, and it has risks, especially if you're trading options and futures, which are leveraged products. When we look at past historical performance, this is in no way guarantee of future results, and we all need to be aware of that. For additional information on these disclosures, please visit tradestation.com and you'll find all the information there. All right. Let me switch over here to my TradeStation platform. You're going to see that I'm joined by my colleague, Manolo. Manolo is going to be in the background, maybe submitting some links or answering some of your questions right here in the chat. Let's go ahead and talk a little bit about what is it that we're doing here at TradeStation. I forgot to do that. We are running two channels as part of the You Can Trade environment. And if you haven't been able to check us out there, please do so. The website is youcantrade.com. And the Getting Started with TradeStation channel is just that, just to hold your hand and help you get started with the TradeStation platforms. We do presentations on all the tools that TradeStation provides, so that you have an idea of where to go to find the things you're looking for. But once you're ready to take your education to the next level, we provide the TradeStation Masterclass. This is a place where we do premium courses. We talk about strategy ideas. We discuss technical analysis. We show you how to do some easy language programming, and we have exclusive guest speakers. So make sure that you also check out the content of the masterclass. That's the URL right there. Also part of the You Can Trade environment, but these are TradeStation hosted channels. So make sure you check us out and see if it's something you want to have for your learning journey. Okay, let me switch over here to my TradeStation again. All right, and let's go ahead and talk about strategy trading. And as I said at the very beginning, we are going to take this from idea to implementation. Most of you are probably aware or know most of the most popular technical ideas that are out there in the industry. We're going to highlight Bollinger today. And before we insert or add the study to my chart, I want to talk about the symbol, time frame, and historical data. The symbol doesn't really matter. The tools that I'm going to show you apply to stocks, futures, and options. You know, we're pretty much open to anything that you can backtest on TradeStation. Options, not that much, because we don't hold a lot of historical data. And one of the things that you need in order to backtest a strategy is to have enough historical data on the symbol that you want to trade. Now, here I have Microsoft. You can see right here on the top left corner, and this is just an example of what you can test. I also set my chart to a 15-minute interval. The time frame is something that is important when it comes to trading a strategy, because the time frame determines the frequency at which your strategy is going to trade. A strategy calculates on every candle. And if you have a daily chart, for example, the strategy will calculate every single day and generate trades for the following day. So it will not, generate trades intra-day, because that's not the time frame that you're using. Right here on this chart, I have a 15-minute time frame. So my strategy will have opportunities every 15 minutes to evaluate the strategy rules and generate orders if it has to. So the frequency or the time frame of the chart has a direct impact on the frequency in which the strategy is going to trade. And that's a decision that you need to make. How frequently do I want to be trading this? Do I want to go through the stress of generating a trade every single minute? Then If that is yes, then you pull up a 1 minute chart, and that is going to be your time frame of backtest. I've set mine to 15 minutes. I may get some intradays generated here from Microsoft. I may get some trades that are, going to be expanded over a span of a day or two. One thing to keep in mind is that the tradability of the strategy, if you have an account that, let's say a TradeStation account, if you have a TradeStation account that is funded with only $10,000, you may not be able to trade intraday for Microsoft because you could be deemed a pattern day trader, and there's other restrictions that go along with that. So if that is the case, then always be aware of all the technicalities of and also the issues that could arise if you're testing a strategy that you're that you're actually not able to trade. That's what I'm trying to say. So if you really want to do day trading, then keep in mind that the time frame has a direct impact on how frequently the strategy is going to trade. So okay, so we talked about symbols, we talked about time frame. Let's talk about also about historical data. Every test that you are going to be doing needs historical data for you to know if it's something that worked in history, or if it didn't. How much history? That's something that you're going to have to determine. We do have years and years of historical data available for you to put on a chart. Right here in this example that I have in front of you, this is Microsoft, and it's going back 1 year. So we have 1 year worth of historical data on a 15-minute time frame for Microsoft. And you can do this for any symbol that you load up in TradeStation. We have the historical data available for you, and it's just a matter of requesting it on TradeStation. If you know, or if you want to know exactly how to do that, just go to data right here at the top of the chart and go to edit symbol. And right in here, you can see that I have minutes selected, 15 minutes, and I have here for the range 1 year back. And you can just choose how much historical data you want to have. Now, what you want to do though, is you want to be able to test this on chunks of historical data to see how the strategy reacts to different market behavior. If the market is trending up, or if the market is trending down, if it's correcting, if it's trading sideways, you want to know how the strategy performs in any of these conditions, because those conditions can present themselves at any time going forward. And you want to be able to have the strategy that can adapt to those market conditions and still provide you consistent results. That's the key here. Looking at historical data and making sure that performance, gives you some sort of confidence that if you turn on the strategy to trade it going forward, that at least you'll have some, moderate results. Again, as I said at the very beginning of this presentation, past historical performance is no guarantee of future results, and we need to be aware of that. But taking a strategy and testing it against historical data does give you some trust about the rules that you've designed, and knowing that, hey, if my rules worked on this chunk of historical data, I'm a little bit more confident about the way that the strategy will behave going forward. So let's go ahead and take a look at Bollinger and how it applies to Microsoft. For those that are not familiar with Bollinger, we'll go over some of its basics, how it's calculated, and some of the strategy rules that are generated around that concept. I'm going to go to Studies, Add Study. And the reason why I chose Bollinger is because it's part of the platform. There's nothing custom here. Everyone that's watching the presentation can pretty much, pull up their TradeStation platforms and do exactly what I'm about to show you. I'm going to just put in the Bollinger Bands. The way they come, I'm not going to change the parameters. This is Bollinger Bands out of the box, no adjustments. And for those that are not familiar with what this is doing, well, first of all, you see a gray line right in the middle of the two outer bands. The outer bands is what's considered Bollinger. The middle band is just a simple moving average of the closing prices, in this case, Microsoft, for a period of 20 bars. I'm looking at a 15-minute bar, so it's taking 20 of those 15-minute bars averaging them together. And what you see in that gray line is just the average of those closing prices. The next step, though, is for Bollinger to take a look at all the data points inside of a Microsoft chart, the ones that are up and the ones that are down in relationship to that, moving average, and start drawing these lines based on standard deviation. Standard deviation is a statistical measure that says that a certain percentage of data points are going to be within these standard deviation thresholds. In this case, the blue band and the red band are drawn at 2 standard deviations. 2 standard deviations, percentage-wise, is 95%. So looking at the chart of Microsoft and the lines that you see in front of you, we have an indicator that's telling us that 95% of all the data points in Microsoft are going to be within the 2 bands, within the 2 standard deviations. Whenever the prices are outside of the bands, meaning that is above the blue or below the red, outside the bands, it means that the symbol has reached an extreme and is likely for the symbol to go in the opposite direction. So what we have here, and I'll point out to a few examples right here on the chart, so that you can understand the underlying strategy that we're about to add to this chart. Whenever the price activity, for example, right in this area, you see how the candlesticks, they go beyond the upper band, meaning that it's reached an extreme. But it's not necessarily the point at which it goes to this extreme that we're interested in. We're interested in the point where it returns from that extreme value, because it's an indication that that momentum has exhausted or is exhausted, and now it's time for it to reverse and go in the opposite direction. So what we're looking for is not, again, I'll recap, we're not looking for the candlesticks to go outside of the bands. What we're looking for is for the candlesticks to have been outside, but now they're returning inside the channel as an indication that they may go in the opposite direction. As you can see, or this particular trade that we're looking at, it didn't quite go through that idea. You see, it actually went down inside the channel, but the price, instead of going down as we would have expected, the price actually continued to go up. It was still inside the channel, but not in the direction that we wanted. Because in this crossover, whenever the candles are above the blue band, it means that it's overextended itself on the buy side. So when it returns inside the bands, we would have taken a short trade. If you had taken a short trade right at that point, oh, this would have been a losing trade for sure, because the price did not go down. So that's the idea of the Bollinger Band. And let's talk about the opposite side. And I'm going to squeeze my chart a little bit here so you can see other areas where the trade would have been generated. Everybody sees right here on the bottom side, we have the red band of the Bollinger Band. When the candles are below the band, again, we are overextended. The price has reached an extreme. On the downside, shouldn't be for long under that red line, because we said, 95% of the data points are going to be inside the 2 bands. So when the price returns back inside the 2 bands, that's our signal to go long, because we expect the price to return back to normal. And normal, since it's overextended to the downside, normal will be to the upside. So that would be a long trade. Did the long trade follow through here? Well, if we had taken a long trade over here, kind of just went sideways. This particular trade didn't actually move up or down. So it was more like a break-even trade. But still, that is the concept of the Bollinger Band. And that is the idea that we're going to follow on this particular strategy backtest. We're going to take a short trade when it's overextended to the top side and it returns inside the channel. And we're going to take a long trade if it extends to the bottom, goes outside the red band, and then it returns inside. We're going to take that as a bullish signal. All right. If we had taken that trade historically from the very beginning of 1 year back, how would the strategy have performed? That is the key question that every strategy trader needs to ask themselves. And you need to sit there for a while and say, well, I have this trading methodology. I'm following these certain rules. Every time something happens, then I take a trade. Well, that's something, when you take that trade, is what needs to be tested. So those are the strategy rules that you're following. And the same way that I talked through these rules of the Bollinger Band, you may have your own methodology, your own rules. Well, that can be tested against historical data as well. You're not limited to what comes supplied with the TradeStation platform. You can pretty much test any idea, and this can be a custom idea. It can be your own trading rules. It can be anything that you can bring in and turn into a strategy. So let's go ahead and take a look at the Bollinger Band strategy, which is also supplied with the TradeStation platform and is designed to be more like a strategy component, so you can use it and use your platform as some sort of a sandbox where you are testing different scenarios. Then we have the ability to change the time frame. We have the ability to change the symbol. There are so many components that you can change in a strategy backtest that, as I said earlier, this can be your sandbox, and you can start developing your strategy and make it as robust as you can. Okay, so let's go ahead and put those strategies in the chart. I'm going to go to Studies, and I'm going to click on Add Strategy. As I said before, these are strategies that come built into TradeStation. One is the Bollinger Band LE, and the other one is the Bollinger Band SE. The abbreviations that you see right there at the very end, the LE and the SE, just tell you what type of strategy it is, what it is intended to do. The LE is the long entry, and the SE is the short entry. We have both sides of the strategy rules that we talked about, when the prices are overextended. So this will take care of both our entries. Let's go ahead and put them on the chart and see what they look like. All right, and we see the signals right there on the chart. I want everybody to notice that strategy backtest is something that is very simple to do on the TradeStation platform. You just have to understand what the strategy is, what the rules are, and then look at the signals. Because as soon as you put a strategy inside of the chart, it'll find every single instance, the strategy or where the strategy would have generated a trade. And it marks every single entry for you historically. Not only that, but it also connects the trades to tell you if they're profitable or not. So whenever you see a blue dotted line, it's a winning trade. And whenever you see a red dotted line, it's a losing trade. So this trade that we highlighted earlier, remember that we were talking about this trade right here? And we said, well, the price overextended itself to the downside. It returned inside the channel. We would have taken a long trade, right? Now the long trade, we took it a little bit higher because I was looking at the bars down here. But if you look closely, let me zoom in so you can see exactly what I see. Let me zoom in right here on this trade. So yeah, I was looking at the overextended candles down here, but in reality, the condition was met back here. You see how this red candle closed outside of the band? It overextended, so the condition was met back here. And then the next bar, if you notice closely, the close was inside the channel. So that means the strategy rule right there in 2 candles. We went beyond the band, back inside, and that generated our long trade right here a little bit before we anticipated, or not before we anticipated, but before we had pointed earlier, So let me zoom out again. And that's why when we look at the entry up here, it's sort of a winning trade. Well, even if we had entered down here, it would have been a bigger win, because we saw the price activity here going sideways, and we said, oh, this is more like a break-even trade, but it's not really, because it waits until the opposite condition is met to close that trade. And this is a characteristic of this particular strategy, where we are combining 2 entries, a long entry and a short entry. And the way that it reacts to those entries is that it reverses you from one position to the other. If you are in a long trade and the short entry is generated, it'll close out your long position and it'll take you short. So it's a back and forth between long and short strategy. It's a reversal strategy. You're always in the market. You're either long or you're either short. So when we looked at this other area where we were, again, overextended, it actually, went beyond the blue band, we would have taken a short trade right here. Why didn't we take a short trade down here? The reason for that is because we are already in a short trade. Remember that this is only two rules. The two rules is long entry and short entry. And if the opposite, entry is not generated, it'll keep that trade until it does. And as you can see that since this trade was generated back on October 13th, we haven't had a break on the bottom side. So the candles have never gone beyond this red band. And it's not until they do that trade is going to be reversed. See, right now we are in a losing trade because we got in right here at, what was the price of this trade? By the way, notice what I'm doing here. You can do that on your TradeStation as well if you want to see more details on a particular entry. I can click on the background of the chart and I can bring my vertical axis right on top of that red arrow. And right here in the data tips window, I see detailed information on this entry. Right there at the bottom, it says the strategy sold 100 at 295.53 and it shorted 100 shares at 295.53. What is the current price right now? 308. So we're talking about $13 difference against us. And if we're trading 100 shares, that's $1,300 losing trade that we have open at the moment. Hopefully that makes sense and I haven't lost you guys in the strategy rules, because this is important stuff. Important if you want to backtest your strategy, backtest your ideas before risking your capital. But what I was saying earlier is that when you put the strategy that it's already been programmed and you put it right here on the chart, it finds every single instance that the strategy would have generated a trade. So I can scroll back a year worth of historical data, which I'm doing right now, and you can see all the entries and all the exits that were generated. Some were winning trades, some were losing. This is a major losing trade right here that I saw. This is what date? This is March of this year. We went short at 235 and we exited the trade at 248. Again, $13 loss or $13 point loss right here on this particular trade. So yes, adding the strategy just uses all the data that you've loaded and finds every single instance where it would have bought or sold short and bought to cover, depending on how the strategy is written. And that's why we started off with loading historical data, because you have to think about how much history is it that you want to backtest, and then just put the strategy on it. Because once you load the data on the chart, the next step is adding the strategy, and the strategy will use whatever data you have loaded on the chart. But let's go ahead and take a look at what TradeStation tools are available for you to get an idea of how this strategy works on this Microsoft chart, or doesn't work. There is a report that we call the Strategy Performance Report, and the report is only available once you've done what I've done here with this chart. You think about the time frame, symbol, amount of historical data, and then put the strategy on the chart. Once you see the signals, the red and the white and the blue, then you have a strategy in place. You can pull up the report. By the way, you don't need the Bollinger Bands or the indicator itself for this strategy to work. The strategy knows what the rules are. What we did when we inserted the study first is just to have a visual of what the lines are, but they're kind of independent. But as someone that's looking at a chart, yes, I like to see the line. I like to see where the candles are crossing it, so that I can double check to make sure that the strategy is doing what it's supposed to do. The data is something that you decide before putting the strategy on the chart. You decide how far back do I want to backtest the strategy. I picked 1 year. And as soon as I put the strategy on the chart, the strategy is going to use whatever data you load on the chart. There's no additional setting inside the strategy where you have to tell, I want you to use 1 year. No, whatever data you have on the chart, that's exactly how much the strategy is going to use. Let's go ahead and take a look at the strategy performance report that is going to be available right here in the data tab. So data, strategy performance report. Okay, the strategy performance report. I'm just laughing because it loads up on a summary page, but I was looking at some other reports and it just loaded on this kind of interesting report, but we'll get to this if we get a chance. You're going to notice that when you pull up the strategy performance report, you have multiple tabs at the very bottom. And the very first tab is the performance summary, which is the one that should load up if it's the first time you're looking at the strategy performance report. Just be aware that if it looks different, you may be on a different tab. Just click on the tab that you're looking for, and it gives you full performance measures. And one more thing to keep in mind is this blue button on the top right. I believe that the first time that you load up the performance report, it looks like this with some sections that are shaded in a lighter gray. This is the expanded view. Usually what I do is I click on that blue button just to collapse, because it gives me a more summarized view of the performance report. I mean, you can look at the other performance metrics and look at how they're calculated. Some of them may be a little bit more useful to you, depending on how you want to look at the strategy, because, they do some additional calculations. We're not going to get into details on that right now, because I want to give you more of an overall performance measure of this particular strategy. First of all, you can see 3 different columns. You have all trades, long trades, and short trades. Whenever you have a strategy that generates longs and generates shorts, you're going to see information on all these columns. If your strategy only generates long trades and not any short trades, then short trades are going to be zeroed out. So that's the way that the report pulls up. And all trades, or the column or the first column here, is going to combine the performance of your short trades and your long trades. Why does it separate long trades versus short trades? Because maybe by having this separation, you can tell which side of the strategy works better than the other. Long trades or short trades. Maybe if there's a bias to the uptrend, I'm talking about market behavior, maybe it's smart to turn off the short side and just stick to the long side. And vice versa, it's always recommended that people trade with the trend, right? So if we're in an uptrend, it's very likely for the long trades to be a little bit more profitable than the short trades. And you can see that very clearly right here. For the past months or past few years, we've been in some sort of an uptrend. So it's very likely when you use a strategy like this that long trades are a little bit more favored than the short trades. And Richard is making a very good point right there in the chat. I wouldn't use Bollinger Band strategy by themselves. In fact, it is always recommended that you use the Bollinger Bands in combination with other studies. And that's the reason why when you go to the strategies here in TradeStation, they are called strategy components. They're not complete strategies in any way. I wouldn't trade this strategy as it is. I would continue developing the strategy and maybe adding other components that I could use in combination with Bollinger Band to make my signals a little bit more robust. Because that's the whole reason why we're doing this. We're making sure that when we enter a trade, that we have enough confirmation to have confidence on that trade that we're taking. So this is the beginning, though. This is how you get started. This is like the base or the foundation of your strategy, and then we start tweaking it. We're going to get to that in a little moment and see how we can make modifications to it and even use some of the more advanced tools in strategy trading, like optimization, to find optimal parameters. But let's see where we get in this strategy development, and then you'll know which tools you can use to continue developing this idea. So as you can see, my long trades are doing much better. But if we concentrate on all trades, we have a total net profit of about $14,000. This is in a year worth of data. And the net profit, of course, takes your gross profit, which is about $30,000, your gross loss, which is about $15,000, and just adds them together. That gives you your net profit. Profit factor is something that I look at a lot. I usually don't concentrate on this amount because this amount is has the has a direct relationship to the number of shares that you're trading. See, right now it's $14,000 because we're trading 100 shares every time the strategy rules are met. Now, that is something that can be changed based on your account size. But if I change this to 1,000, I would just be adding another extra zero here. So my net profit would be $143,000. There's a direct relationship. In fact, let me show you that so you can see that here on the screen. I'm going to double click on the strategy signal. I'm going to go to properties for all. And here's where you find the fixed shares. Notice that it says 100. If I make that 1,000 instead, of course, trading 1,000 shares of Microsoft means that every time you trade, you're trading $300,000. So you always have to think about, or things to think about is also your account size and the tradability of this strategy. We're doing this back test on Microsoft, trading 100 shares at a time, but you have to be aware that every time you trade 100 shares of a stock that's worth $300, we're talking about a trade that's $30,000. But if I make this, fixed shares 1,000 and I click OK, you can see that how this gets recalculated. Notice how my net profit is now at 143,490. So it's a direct relationship. So sometimes I don't look at the net profit because I know I know where that number comes from. But the profit factor is something that I take a look at a lot. So let me go back here and set that to 100. So profit factor is how much the strategy is making for every dollar that it's losing. And as long as you have, as long as you are above 1, I wouldn't call that you have a good strategy if this is 1.01, because it means that for every dollar you're losing, you're making $1.01 or $1 and a penny. So that's not a robust strategy. That can break down very easily. But in this particular historical back test, for every dollar that I lose, I make almost $2, $1.91, which is okay. And if I look at the long side, take a look. I have a profit factor of 3.45. So for every dollar that I lose, I make $3.45. Again, this is a strategy back test. This is no guarantee that it'll do the same going forward. But if you look at the gross profit on my long side, the long is $15,000, almost $16,000. And it only lost about $4,000. And that's why my profit factor is so high. In addition to looking at the profit factor, take a look at the total number of trades. Here I have 175 trades. You want to make sure that you have a back test that has enough historical trades to make sense, to be statistically significant is the right word to say, because you don't want to rely your performance only on a few trades. Yeah, you could have had 3 big trades, and this would have been a perfect strategy if it happens exactly the same. And that's not the whole idea here. You want to make sure that you have a big enough sample so that your numbers are statistically significant. How many trades are recommended? Somewhere between 30 and 40 trades. It is recommended to be the minimum number of trades in your strategy backtest. I have 175, so I have a good sample of data. You also see the percent profitability. Right now it's at 69%, almost 70%, which is very common for this type of strategy. These are not trend following strategies. These are more like oscillating strategies. On a trend following strategy, the normal percent profitability should be around 30 and 40%. So this is interesting. It tells you how many winning trades or losing trades you have. A lot of these, fields are self-explanatory and very obvious. But there's a couple of things that I want to point out. Largest losing trade compared to your largest winning trade. Take a look at this largest losing trade of $1,557. Maybe that's an area where my strategy needs work. Okay, how do I prevent the strategy from losing that big of a trade? We'll take a look at that in a moment. But this is very telling information about where are the weaknesses of my strategy. One value that I look at all the time is this one right here, the one that I'm hovering over. It says maximum consecutive losing trades. Losing trades are something that you have to expect on every strategy backtest. You have to be ready to lose. However, the consecutive losing trades plays out a psychological barrier to trading any strategy. How many times did the strategy lose consecutively? In this particular case, only 4 times, which is not that big of a deal. I think everyone here can tolerate 4 trades in sequence. However, if it goes past that number, you can start doubting your strategy. I know that I start doubting my strategy on the first losing trade. I'm not sure about you, but having to lose consecutively, it's something that messes up with your mind, with your confidence on your strategy. So you have to be ready for that. And if last year this particular strategy lost 4 times consecutively, it could happen again. It could happen again. It could be worse than 4 going forward. So this is not telling you that this is exactly how it's going to behave going forward, but you have a measure of what happened historically, and you have to be ready for that. Other things to look at here in the strategy performance report, like drawdown. Drawdown, there's no historical backtest if you don't look at drawdown. Drawdown is how much the strategy is putting at risk. My drawdown right here went down as low as $2,400. That's from peak to valley, which means that from our maximum profit to how much we gave back, this is $2,400. We could have lost that amount in one trade. So it's important that we also look at drawdown to see how much risk we're putting into the strategy, because if these numbers are too high, then we may have to look at the strategy and see how we can prevent the strategy from getting itself into these major drawdowns. Okay, so yes, somebody's suggesting to put in stops, and that is in reference to these largest losing trades. Let's go ahead and do that, because I think that's a great idea, and that was going to be my next step. On my strategy right here, I only have entries. I need somehow to stop a trade from losing more than I want. For example, this this short trade that was generated back on the 13th last week, we need a way to stop that. What if Microsoft starts going up and up and up and up, and we lose, and we generate a losing trade here? We need somehow to protect us from scenarios like this. Let's go ahead and go to studies, add studies, and I'm going to just add a simple stop loss. Let's go to studies and add strategy. Remember that strategies are separate than studies. And I'm going to go here to the S's. Stop loss is right here. I'm going to use just a regular one. The LX and the SX are very individual to the long and the short entries. I want to use the one that doesn't have the designation, which covers you on both types of entries. I'm going to click OK, and I have the list of strategies. I have my 2 Bollinger Band strategies, and I'm going to modify the stop loss. I'm going to click on customize here, because this is important. We have to tell the stop loss where you want to get stopped. Position basis in this case is false. So this is an amount of movement per share that we're calculating the stop on. So if I say don't lose more than 10 points, if I'm trading 100 shares, this 10 that I'm putting in here is points per share, meaning that my stop loss would be $1,000. Does that make sense? 10 points per share is 1,000. If I don't want to do the math, I just have to do this. I turn the position basis to true. So the false, you turn it into true. So you're making the calculation based on the position. And the amount here would be 1,000. Does that make sense? If you're trading futures, it's a little bit different, because the stop loss amount has to factor in what the big point value is. Every futures has a different value per point, and you have to take that into consideration. So let me turn this into false. And if you're doing a back test on futures, use this. So if you have the movement per, this case would be contract, Just type in an asterisk and then type in the word big point value, just as I did there. No spaces, big point value. So we have to multiply whatever point movement per contract times the big point value, and it'll work. Like for the, if you're a futures trader, you know exactly what I mean. When you look at the S&P E-mini, for example, you know that every point that it moves is actually $50. So this little formula right here, it'll take those 10 points that you put in there, and it'll multiply by the 50 that every point is worth. That's exactly what big point value brings in. For stocks, doesn't really matter. So you put in 10, and it's just 10 whole points. We're not talking about 10 ticks. We're not talking about 10 cents. This is $10. Let's see what this looks like on my strategy backtest. All right, take a look. See what happens to that short trade? It got stopped. Everybody sees that? It's a losing trade, but we are stopping it. You know, and let's see, let's check out the entry again. The entry here was 295.53, and the exit is 205.53, exactly 10 points higher. We lost $1,000 in there. So how did that affect my strategy performance report? Well, let's take a look. Go to data and strategy performance report. You can come here as many times as you need to just to check the performance. Now, take a look at the profit factor. It didn't drop that much. I think I was at 1.93, now on 1.83. You know, we gave back some of the total net profit. I would think it was a little bit higher than what it is right now, but it doesn't really matter. What matters now is that we introduced a way to protect us from unlimited losses. We have a stop in place. So even though we gave back a little bit of our net profit and a little bit of our profit factor, it could have made the strategy a little bit more tradable because now we have a protective stop. Of course, that introduces more trades. We were about 170, now we're at 183. Our profitability went down a little bit, but take a look at the largest losing trade. An average or both combined is at 1,093. On the long side is exactly 1,000. On the short side, 1,093. You know, the extra change that you see here, that why, and you may be asking, why isn't it 1,000 instead of, why isn't it 1,000? And why is it 1,093? It could have been just a gap. It just got you the best price possible. Whenever there's a gap, there's no control over how much money you lose. I mean, you can have a $1,000 stop like we do here, but there's a big gap there. If there's a 20-point gap in Microsoft, and I mean, and your stop gets triggered, you're going to lose that gap. You know, no questions asked. So even though we have these mechanism of protecting us, we're open still to market movement and some of the stops that are generated. All right, let's go ahead and take a look at some other components here that we can take a look at. Somebody's asking here, can I make the stop an ATR? For sure. That stop can be anything that I want. I haven't used an ATR because I wanted to keep the presentation simple. So we're just talking about a fixed stop. But this can be an ATR. It can be a trailing stop. It can be anything that you want that stop to be. Let's see. In the stop loss, I'm going to select it and I'm going to customize it. Because if you guys remember what I did with the stop loss, I pretty much, you know, selected the 10 randomly. I didn't put any thought on it. Well, actually, I knew what my largest losing trade was. Everybody saw that in the performance summary. So I had an idea of where, you know, I could put in a stop. If I do something unrealistic, for example, if I just set it on the default, which is 1, let's see what happens if I just leave it on the default number 1. I did change it to 10, but you can see that if I put it on 1, a $1 stop on Microsoft, it's very tight. And this, I'm not sure what effect it has on my strategy, but we can take a look. All right, you can see how that didn't do very well. You know, my net profit went from 14,000 down to 4,000. My profit factor is almost breaking even. We have double the amount of trades, and our profitability was cut in half. So setting a stop at $100 doesn't mean that the most you're going to lose is $100. It means that some of the winning trades that you had previously may turn into losing trades by this tight stop. So what is an optimal value for the stop that I'm using right now? I mean, who's to say that one works better or works worse than 10? Or how do I know what would have been the optimal value for this historical backtest? Let's use optimization to find that. I'm going to come over here to my strategy settings. I'm just going to format it. I'm going to double click on my stop loss, and I'm going to highlight that one. When you highlight certain parameters or certain inputs inside the strategy, you can click on optimize down here to do a series of tests. This is what I'm going to do. I'm going to go from 1 all the way to 15. In fact, I can go all the way to 20. You can choose the range of values that you want. And this is what it's doing, is telling TradeStation to run a test on each one of these stop values, starting with number 1, which is the starting point, stopping at number 20, like a $20 stop, in increments of 1. The increment is important because it'll tell you how it will cycle through all the parameters. From 1, it'll go to 2, 3, 4, all the way to 20, and test every single stop loss value that you put in here. This is very powerful. It is also very dangerous because you are curve fitting the strategy to historical data. And it has to be used in a way that helps you find optimal parameters, not necessarily, pick the parameters for you. You need to look at the report, and I'll show you that in a little moment so you can have an idea on how to look at this. I'm going to test from 1 to 20, click OK. If I look at the test count, because once you go back here into the list of strategies, it tells you that the test count is going to be 20. And it makes sense because if it starts at 1, goes all the way to 20, then it's just a total of 20 tests, but it's going to pick the one that makes most sense, or the ones that has the most, not the one that makes most sense, but the one that has the most net profit, which is the fitness factor that is used in optimization. Okay, let's go ahead and take a look. I'm going to click on optimize. This will run the tests, and you're going to see that within a few seconds, I'm back on the chart. That is how fast the optimization runs. It's very quick. I have a whole year worth of data here, and the strategy optimization report went through all the different variations of that stop, produced a report for each one, and gave me a report that's called the strategy optimization report. So take a look, 2 reports. We already looked at the strategy performance report. Now we're going to take a look at the strategy optimization report. By the way, the optimization report only comes up right after you run an optimization. Keep that in mind, because when you come here to the data tab, this will be grayed out. You have to run an optimization for the report to be available. Let me open it up. Let me resize this so that we can take a look at it. Let me make the font bigger for now. One of these is going to be customized window, and I'll make the font bigger so that everyone can see it. Okay, so that's my font. My font is bigger. I want you guys to take a look at what's going on here. The stop loss amount that was tested is right here on the far left. And you can see how the total net profit goes down as the stop loss amount changes. Now, this is sorted by net profit, which is the fitness factor used to select the optimal parameter. But I want you to also take a look at the parameters that are around the selected one, because you want to make sure that the parameter that you select is not an outlier. And what I mean by that is I want to see the 7, which is the one that was selected. You can see that that's the top net profit. But you can also see that 8 would have given you very, very good results as well. 6 would have given you very good results as well, is right here. So you want to make sure that the parameter that you pick has or is around the vicinity of other parameters that would give you good results as well. Because you don't want to select a parameter that is so unique that it would have to, the market behavior would have to be the same going forward for that uniqueness to be the same. You don't want that. You want to have some parameters that are robust and that are within the vicinity of other numbers that are around it, so that it speaks to the robustness of the strategy or the parameter that you have selected. In this particular case, it selected 7, but I can apply another one if I want to. For example, if I want to apply test number 4, actually it was test number 6, I can right click and apply test to the chart. But just let's leave it on that one, which is number 7. Let me close this out and look at the performance report. Now, this is the performance report using a $700 stop loss. You can see that we're back to where we were earlier. So, this report is not so far away from what we had put in before, a 10. So the performance is kind of similar. So any number, that 6, 7, 8, 9, or 10, I think are going to give you results that you're expecting. When you look at optimization, look at it that way. You don't want the optimization to pick the parameters for you. You want to make sure that you pick parameters that are consistently giving you good results, no matter what the backtest period is. If I select, for example, the 7 that the optimization here suggests, I would do another test on maybe the data, not of this year, but the year 2020. Now we're in the year 2021. We did the optimization. I would take that, 7-point loss, and I would apply it to the whole year 2020 to see what the performance would be on that year and see if it's still giving you good results, because that's the way that we want to use optimization. Now, once you have this strategy already figured out, you've back tested it, you put in your stop, the next step is to continue testing it, but on the simulator. Everybody here, if you're all TradeStation clients, you have access to the trading simulator. I'm logged into my simulator right now, and I can take my strategy. Let me go here to studies and edit strategies. I'm going to generate or put a check here for automation. First, to generate strategy orders for display in Trade Manager's Strategy Orders tab. And second, to automate the execution. I'm going to agree to the disclosure. This is pretty much telling you what the risks are of automating a strategy. And you have the option to run the strategies with confirmation on, which means that every time the strategy generates a new trade, you would be alerted and asked to confirm whether you want to take that trade or not. Or you can take this one step further and turn the confirmation off, which I'm also going to agree to the disclosure, just explaining how risky it is for you to turn off confirmation. But if you are trusting the strategy, you can take this and test it on the simulator. Remember that I'm testing this going forward with my trading simulator, confirmations off, and I click OK. So now my strategy is fully automated. If I'm looking at the chart right now, I'm still in this short trade. So if the price activity reaches my 7-point stop, it should generate a trade. However, of course, there are other technicalities that we would have to consider. For example, I don't really have that short trade in my account. This is just a strategy trade. So maybe if it reaches the stop, it will just ignore it in my real account because I have no position for Microsoft. But as soon as it generates the entry for the long side, I should get in and it'll show up right here as a real trade. All right, guys, we've reached the end of our session. Thank you very much for your participation and your interaction. Thank you for staying here with me. I want you guys to know that it's a pleasure, for everyone here at TradeStation to do these type of presentations. In a couple or a few days, my presentation will be available for playback in the TradeStation YouTube channel. And again, we are live every single week inside of the TradeStation channels on youcantrade.com. So join us and we'll continue the conversation there. Okay. Have a great afternoon and thank you for joining me today. Bye-bye.